Well, I think Mr. Draghi has sort of caught the markets on the hop a little bit by acting sooner than was expected. Certainly his comments at Jackson Hole made it clear that he was going to move in this way, but probably a little sooner than markets had anticipated, both in terms of another rate cut right across the corridor and taking a step closer, but not quite towards QE, but certainly with some asset purchases, without a clear target, of course, but certainly an ambition to increase the size of the ECB balance sheet. So that's, as I say, caught the markets a little bit on the hop, and it's consistent with the overall message that we've had previously, and it's going to support global liquidity further, and we've already seen the effects of that since Jackson Hole. Well, you're quite right. I mean, so far, up till now, it's been pretty much words rather than actions out of Mr. Draghi, and he's been very effective at getting the borrowing costs down, particularly in those economies that have had difficulty servicing debt. So effective so far, but I think it's reached a point now, as Mr. Draghi said himself, that it's not just about, in fact, monetary policy, it's also about fiscal policy. And as we know, within the Eurozone, there is some intransigence in terms of relaxing some of the austerity measures that have really been imposing themselves on some of the weaker economies, which have elongated or lengthened, if you like, the process of recovery. So on its own, monetary policy not enough, but certainly taking steps towards increasing the size of the balance sheet for the ECB and possible steps towards eventual QE, and the European Central Bank has not gone down that route so far. It's been the one central bank that has not increased its activity in the economy through quantitative easing, and we are certainly closer to that point. And that is, you know, if you look at markets in this part of the world, for example, China, a lot of the movements on the Chinese equity market as of late have been highly correlated with G3 liquidity. So we could expect, if the ECB continues to move in this direction, more liquidity globally, more money flowing into risk assets.